Logging on. Welcome to the DreamSpring SBA Forgiveness webinar. We're happy that you've joined us today. The goal of today is going to be to give you a forgiveness overview as well as some more specific information. Really looking at the coming weeks, most of you have received your PPP funds by now and are probably starting to look ahead to what the forgiveness process looks like. We want to give you the ability to understand what that will look like when you're initiating, and also what you need to be doing now. Throughout this webinar today, we're going to give a general overview as well as some more specific information. Every business is different, and it's challenging. For me, I've done a handful of these webinars already, and each time they get a little bit harder because the SBA is constantly announcing new information, and what we're doing is trying to stay on top of that. And if I'm honest, if I wanted to fully answer every question that's probably out there, it'd be a 6-hour presentation. We have this blocked out for about an hour today. We're gonna be done at 2:55. We have a Spanish webinar that starts at 3, so we need to free up time for that. I do want to introduce myself really briefly. My name's Kevin Williams. I am our SBA program officer. One of my main roles has been overseeing the organization's response to the CARES Act, rolling out our PPP programming. And now we're really pivoting pretty intentionally towards the forgiveness process, and so you'll likely be seeing some good communications from us. Also with me today, I have Jill Gasson. Jill, do you want to introduce yourself briefly?
Sure. Hi, I'm Jill Gasson, SBA Program Manager. Kevin and I have been working very closely on the PPP Loan Program, and we'll look forward to answering your questions towards the end of the program. So if you do have questions, please put them in chat, and we will address as many questions as we can in the minutes after the presentation.
Perfect. Thank you, Jill. So order of events for the day, I'm going to be talking quicker than I normally like to in a presentation. As there's more information that comes out from the SBA, we just have to continually be revising and adding things. So we're going to be doing an overview and explanation of the forgiveness process. We're going to be showing you a forgiveness calculator that we've developed internally that we think is a good visual for a lot of people to start to understand what that'll look like. And then at the end, we're going to be taking questions. As Jill had mentioned, from doing a few of these, what we found works best is if you have a question, go ahead and put it in the chat box. I would encourage you to recognize there are a lot of those we'll answer throughout the presentation. We will pivot towards them at the end and answer them in order then. One thing, if I use a term that you don't understand, recognize that I'm probably going to address what it means later. And so if there's something specific or if you have a general question, you can pop it in there. It may be answered as part of the general course of the presentation as well. As we're getting started, I wanted to address one of the questions I get regularly about, okay, who are you really interacting with here? And what is DreamSpring as an organization doing? A lot of folks have actually not been previous DreamSpring clients. When we did our initial round of PPP funding, we were mainly working with people who are existing clients, but just to give you a 2-second background on it at least, DreamSpring is a nonprofit. We're based out of Albuquerque. Our SBA staff is actually based out of Denver, so that's where both Jill and myself are working from home currently. As you've probably noticed, throughout PPP, your interaction is primarily with DreamSpring. And so you're not talking to an SBA representative, you're talking to DreamSpring staff. And so as you can see from the diagram that's up, really as the borrower, you are interacting with us, we are interacting with the Treasury or the SBA, they're giving us information back, and then we're communicating with you. So as part of round 1, for example, the way it worked is you provided an application for us. We then reviewed that. If it was acceptable, submitted to the SBA. They gave us an approval, and then we sent you the funds. What happens with the forgiveness process is exactly the same, actually. So when it's time for you to apply for forgiveness, you will provide the information to DreamSpring. We will review. If we're able to approve it, we'll send it to the SBA, who will then give us an approval and response. At that point, we will be able to write off whatever portion of your loan is forgivable will be reduced from the loan balance. We'll then communicate that back to you. Ideally, 100% of the loan is going to be forgiven. We'll get into what happens when a loan is not 100% forgiven later, which is going to be the case for some people when we understand that. The graphic on the bottom showing, okay, treasury directly to the borrower. What happens here is theoretically, if you did not submit your forgiveness request or you stop paying us, the only time you interact with the treasury directly would be at the point that we kind of step out of the equation, and your debt does become with the treasury if you don't apply for forgiveness. So that's really, as long as things go in accordance with plan, as long as you do your role, your interaction will be with our staff. And one thing that's important for me to acknowledge is that as an organization, we participate in Paycheck Protection because we're a mission-driven nonprofit. These PPP loans are designed to be forgiven, and we think that as a result of that, this is an incredible tool for many businesses that are enduring hardship right now. The hope for us participating is we want to give equitable access, help people be able to get these funds, keep their business afloat, keep their dream alive. And within that, we recognize that PPP is only a good opportunity if your loan is forgiven. So for example, if you received a PPP loan and it's not forgiven, it's just a debt, which for many businesses right now is not a very healthy time to be taking on additional debts. And so our goal throughout our underwriting process was to only approve loans that we felt like would be forgivable. So many organizations have been working and saying, okay, can I approve this loan? Has been their mentality versus can we forgive this loan? And so for us, if you received approval from DreamSpring, we're actually pretty well convinced that your loan will be forgivable as long as you provide appropriate documentation. Based on what we saw in your financial information you provided, based on interactions with you, we feel like you as a borrower will be able to have your loan forgiven. Today, we're going to be going over what steps you will need to take and what your responsibilities will be within that, because we recognize as well that if your PPP loan is not forgiven, that becomes a much less beneficial experience for you. Our organization on the whole is really very, very motivated throughout this process to try and be the best customer service oriented that we can, recognizing that we would like to make sure that we acknowledge that many of our applicants experience longer delays than we'd like in communicating with our staff. Throughout this process, we typically will do about 900 loans over the course of a year. Throughout the PPP process in May alone, we've done over 1,000. And so our response times have been slower. For the forgiveness process, we're working hard to make sure we have a good plan in place to provide just excellent customer service. And so you can look forward to that. Moving forward here, the forgiveness process on the whole, rules and guidelines are set forth by the SBA. So what happens is the SBA comes up with rules and guidelines for how forgiveness works, and then requests are processed by DreamSpring. And so this isn't an instance where we have the ability to develop our own underwriting criteria, create our own applications for what forgiveness should look like. Really, we take what's given to us by the SBA, and we help walk you through that. Forgiveness requests are able to be processed whenever you are ready. And so essentially, starting around that 8-week out mark, we're going to be in contact with you. It might not be 8 weeks to the day, but it'll be close to it. We'll be in touch with you to start your forgiveness request, or at least to give you the tools to know how to move forward. One thing I'm encouraging people on, I'm a procrastinator. I'm a self-identified procrastinator, which I don't think our organization always loves. I don't think my wife always loves it. Within this is a type of request where you'll need to be providing receipts and documentation to us. You can put that off if you'd like. You can wait until September or October even. However, it's probably easiest if you do it shortly after your 8 weeks ends, because you're more likely to have documentation on hand. If you give us something that might not meet the standards of the SBA, it's easier for you to make corrections. And so I would encourage everyone, you don't need to rush into the forgiveness process. It's not that you have to do it in the first week. However, it's something where once it's an option, maybe get the ball rolling there, start interacting with our staff, start getting what you need to pull together. From an organizational level, it is beneficial for us to have your loan forgiven. The reason I'm acknowledging that is I don't want there to ever be a feeling or dynamic that you feel like we might not be trying to help you. We don't want to forgive your loan. Actually, it's better for us if 100% of your loan is forgiven. That works out. If you want to get into the financial details behind that, I can walk you through it. But our hope and goal is for as many of our loans as possible to be 100% forgiven, which is why we're doing webinars like this. Forgiveness requests, are provided to us, and then we send them to the SBA. Those are going to be reviewed. As a result of that, we are going to make sure that we are within compliance. We don't want to cause any problems for any of our borrowers if we submit an incorrect forgiveness app or anything like that. So that's why we're going to be working with you to make sure that that's done correctly. It's in our best interest. It's in your best interest as well. What the borrower is going to need to provide, what the business owner, you are going to need to provide, is going to be the SBA forgiveness application and then documentation of payroll and eligible expenses. This is actually a fairly simple process. In many ways, it's actually not any more complex than the approval that you just went through with us so far. The SBA forgiveness application is a document that they released just over a week ago now, I believe. I'd actually thought about going through that today. I made the intentional choice not to because we recognize that you're going to be filling this out in 5 weeks. You probably don't need a step-by-step tutorial of that right now because really you might forget it between that meantime. And so we will have how-to videos and materials coming to answer specific questions on that application. But it's similar to the SBA 2483 form, which is the PPP application that you filled out on our website. It's not that much more complicated, but we're going to be providing information to help you fill that out. You also need to provide payroll and documentation of eligible expenses. Moving to some more specific information. Forgiveness and the process of forgiveness differs by entity type. And so what that means is that based on how you file your payroll, based on how your taxes are filed specifically, what you'll need to provide for forgiveness is different. There are two camps that this falls into. I'm going to start on the right side of the screen, which says borrowers approved via Schedule Cs and 1065 partnership tax returns. For these borrowers, the forgiveness process is actually easier. As a result of that, what we need to provide the SBA is actually your 2019 tax return, which we already have on file from your original application. And so as a result of that, if you are a Schedule C filer, or if you have a 1065 partnership return, we are not going to need payroll documentation from you. However, you do need to be keeping detailed records of your eligible expenses. I'm going to dive into what eligible expenses are towards the back half of the webinar. Borrowers that were approved via 944s, 941s, 940s, W3s, and payroll processor records, these are typically entities that have several staff. So for example, if you have staff and you have a payroll, you'll need to be keeping detailed records of your payroll. And so when we come back around to the forgiveness time, we're going to be looking at that 8-week period, and we'll need to see, okay, what was paid out in payroll during those times and what payroll expenses were incurred. That is much easier if you have a payroll processing company. So the idea here would be, ideally, you have a business that's taking care of that for you, or you're doing that yourself, but we'll need detailed records of that. I've been encouraging everyone, just take the time now, set up good standards for that, because it's easier to do that now towards the end of May than in July have to retroactively come back and provide new information. So payroll processor records, and then essentially receipts for your other eligible expenses, which will be rent, interest-only mortgage, that sort of thing that I said I would break down later. Expense timing and allocation is something we get frequent questions about. One of the things that you might have noticed in the news in the recent days that this actually might be changing. All of the information that we have so far is based specifically on what the SBA has said. There is a bill that was approved in the House yesterday, I believe is going to the Senate soon, that would change some of the terms and lengthen the weeks from 8, and it could increase either to 16 or 24. We've seen both numbers there. One of the big challenges for me about having a webinar today is that some of this is going to be a little bit fluid. What I am encouraging everyone is that right now, we only expect the forgiveness restrictions to loosen. We don't expect them to get tighter. So for example, the SBA is not going to turn around and say, okay, you only have 4 weeks of expenses you can cover. It might expand to 16 as the Senate has proposed, or 24 as the bill the House passed yesterday. What we are going to go through today is specifically what is the current legislation. Within that, so it's 8 weeks from disbursement. So 56 calendar days. It's not business days, it's 56 calendar days. This clock starts when the funds actually arrive in your account. So for example, if you signed your DreamSpring loan agreement on the 21st, funds might not have arrived and processed with your bank until the 23rd or 24th. So when you're trying to figure this out, go and look at your business account and see when the funds were actually distributed. From that point forward, you'd count 56 days of the calendar, and you'd recognize that expenses need to be paid or incurred during those coming 56 days. So that paid and incurred language is important because what that means is, let's say hypothetically you received your PPP funding on May 20th, and you had a payroll period that actually you paid people their checks on May 21st, maybe even had some back pay that you paid for employees that were working as far back as April. All of those expenses you pay out on May 21st, even if the hours were worked before that date, is an eligible payroll expense. That's something that was paid during that timeline. Now let's go to the opposite end of things. If your funds were received on May 20th, your period of 56 days, ballparking this, probably ends around July 14th would be my guess, maybe 15th or 16th. Within that, let's say your last pay period, the last time you actually gave your employees a check, let's say you're doing monthly, so you pay them at the end of June. What that incurred language means is that you could come back and say, okay, my period ended on July 14th, and you could show the payroll expenses that were incurred during that time. So any hours earned by employees or any hours worked, any salaries earned, you could show that as being a payroll expense. You can't go past the 14th. You can't say, okay, well, my employee worked the 16th, or count wages or salary past that point. But even if the funds have not reached the borrower by the 14th, they are still eligible, which is great. The SBA has some vague guidance around this, but what they're saying right now is that they would prefer for you, if your payroll was monthly, rather than waiting to the end of July, to do a special pay period and maybe give them that additional funding at July 16th, 17th, 18th. They want it to be separated out to keep things clean. If you have specific questions about that, we can answer that at a later time. You cannot prepay expenses, meaning I've had a question from a few people of, well, my business rent, I'm able to pay 3 months of that now. You can pay your bills when they're due. You cannot make supplemental or additional payments. So within that, what that means is that if you have a bill that's due for your monthly rent for your business, you can count anything that falls and is paid during that time. You can't just move down the road and make additional payments though. One little bit granular detail here that's important to a few folks, you don't need to worry about this. It is possible you can select an alternative period to start the beginning of your 56-day cycle. The SBA by default will start that on when the funds arrive in your accounts. It is possible you can apply and get a different date selected. You need to provide a reason why this is necessary. You could, for example, say, well, my pay period actually begins a few days later. And as a result of that, there is going to be a workflow for that the SBA has not announced fully. We will see that with time. So if you're panicking saying, oh, that 56-day window doesn't work, recognize that there may be some flexibility there. Within that, the other point that's important though is that because it's expenses that are both paid and incurred, I think actually 8 weeks from disbursement will work for, from my reasoning, 95 to 100% of borrowers. It's going to be most people. Allocation, this is another area where the new bill that moved through the House might change this. As things sit currently, a minimum of 75% of the loan needs to be applied towards payroll. A maximum of 25% of the loan can go towards eligible expenses. You are absolutely able to use more than 75% of the loan towards payroll. So for example, if 90% or even 100% of your loan goes towards payroll, that's all forgivable expenses. Within the current legislation, a maximum of 25% can go towards those eligible expenses. So what you cannot do is show 30% towards eligible expenses and have that forgiven. So for example, we'll go through this in our loan calculator in a few minutes, but if you have a $10,000 loan, you have $2,500 to spend towards eligible expenses. if you turn around and provide our team with $3,000 of receipts in July for your forgiveness, showing that you got business rent, you've got utilities, you have other eligible expenses, the issue will become that we are only able to forgive up to $2,500 of that. So it's not a problem, but that's where you get capped out. So the minimum versus maximum language is important there. What can cause reductions in forgiveness? This has been something that's caused a lot of concern amongst borrowers. And there's both an FTE comparison, so full-time equivalent comparison, and then an employee compensation comparison. So we're going to start on the FTE side of things. I think from our closing process, this has been one of the most challenging stress points for many of our borrowers. The SBA has actually released some really good new information that we're excited about here because we feel like it gives a better understanding of what's actually going on. So what this means is if you have fewer FTE employees on staff on June 30th of 2020, you could find the percentage of your forgiveness reduced. Our loan calculator, I'm going to show you how this works in a minute. But what it means is if you had 10 FTE employees previously, you come to June 30th, 2020, and you only have 9, then you would find that your loan forgiveness would be reduced by 10%. So you've gone a 10% reduction in staff. If you went and you had 20 staff and you reduced to 19, you would have a 5% reduction in your forgiveness. What the SBA has set out is that this is in comparison to your February 15th, 2020 FTE, or on the other side of things, in comparison to your FTE from the payroll period used for your loan calculation. So there are two options. Here's our current understanding that you will be able to use either of them. So for many borrowers, the second option means that we use your average FTE from 2019. So for example, if Q1 of 2019, you had 20 employees and then it moved around a little bit from there, but you averaged at 21 employees on average on payroll in 2019, that's what you need to have on June 30th. However, let's say as of February 15th, you actually only had 18. You could elect to use either number, and you probably lean towards that 18 option. One area that's been a major stress for people is wondering, okay, I've already let some employees go, or I've had to terminate someone for cause, or other barriers that might have led to you having fewer employees that's actually out of your control. So for example, we've had some people already expressing to us that they've offered someone their job back and they've declined it. What we've been told by the SBA now is that those actually will not count against your FTE equivalents. So going back to our example of if you had 10 employees, let's say you've reduced that down to 9, you had to let someone go, what you're able to do is reach back out to them. You'll need to provide written documentation of this, but you reach back out to them offering them their previous role at their previous compensation. If they decline that offer, then you actually do not need to count them against your FTE. So you add them back, it would not result in a reduction of forgiveness. What's also happened is we've heard from some people that they've had people resign their role. You will also not be penalized for that. And so as a result of that, what we will need if you had employees that have resigned, that have refused an offer to return, or I forgot to cover this, but have been terminated for cause, where if you have an employee that does something that is outside of what's, that is just not appropriate, then you're able to terminate them without fear that they'll result in loan forgiveness reduction. So as a result of that, what you'll need to provide, if that's your instance, is written documentation of that. So for example, you can't just come and tell us, well, I called them on May 14th and offered them their job back. It will need to be a written statement. So I'd encourage you, if that's your situation, if you have an HR department, that's easy. If you are a smaller entity, maybe just provide an email transcript showing that you had offered them the job back, or outlining why they were released for cause, or have them provide a letter of resignation. Those are all easy options there. FTE, there are two different ways of counting that as well. The way that I think is simplest, and what's on the screen, is that one FTE equals 40 hours per week. So any full-time employees equals 1. Anyone that is less than 40 or around 30, but anyone less than 40 technically counts as 0.5. There's a small typo on the screen here, but so for example, someone working 32 hours a week, you'd actually count them as 0.5. That keeps the math pretty easy. The other option is that you can go down to the 10th. And so for example, for every 4 hours they work, they count as a 10th. So a 32-hour employee would count as 0.8, or a 4-hour employee would count as 0.1. If you'd like to get that granular, if that's more helpful for you, you are able to do that as well. One thing that I've been asked regularly is, oh, I used to have 2 part-time employees. One of them quit and doesn't want to come back. Can I just hire this other person full-time? Yes, and that might determine some of how you use that calculation. The other piece that can result in a reduction of loan forgiveness is compensating employees at less than their normal rates. So employees need to be paid at least 75% of what they were earning previously. And the period of comparison is January 1, 2020 through March 31st, 2020. And so you'll look at what they earned Q1 of 2020, essentially. You need to pay them at least 3/4 of that. This rule, the reason that's there is because they don't want to have the ability for a business owner to reduce someone's wages dramatically, but hire additional people on and still have their full loan forgiven. They want you to be compensating your employees at their previous rate. So I'm going to encourage everyone, stay within the bounds of this one. It actually gets more complicated where the moment you go below 75% of normal compensation, either be it hourly or monthly salary, you start to see your forgiveness reduced by the dollar based on how far you've gone past that. So plan on paying everyone at least 75% of what they were earning previously. What documentation is required for forgiveness? So this is an area that, as I mentioned before, it's easier for anyone filing a 1065 or a Schedule C. If you've done that as part of your application, you sent that to us already, and you actually will not need to provide any additional payroll documentation. For others, it's either going to be a payroll processor record with an IRS 941 supporting forgiveness. So this is an area where you will want to keep payroll records. Ideally, you have a third party that's preparing those for you. So if you're an entity that has 5 employees, do everything possible to generate strong, good payroll processor records. The areas that get to be a little bit harder for us and might cause some flags for the SBA are, for example, if you have a just Excel document that you send over. It's possible that'll work. However, I don't want to guarantee that'll be acceptable in every circumstance. However, if you had an Excel document that had supporting bank statements showing transfers, and you had an IRS 941 supporting that as well, that becomes possible. The ideal situation, and what's easy for us, is a payroll process record and an IRS 941 supporting forgiveness. So those are the easy options there. So that's what I'd hope everyone is working to generate. We do recognize that for some people, if you're a smaller business, that might be more detailed than you've been previously. This might be a good time to set up those standards just to make sure that the forgiveness process is easy. However, I'd encourage you to reach out to us with specific questions there, and we are happy to say, okay, we think this might work or it won't, and giving you some good feedback. In addition to those, you'll need to provide any documentation of paid benefits. So for example, if you're contributing to employees' retirement accounts, if you're contributing to their health care, you'll need to provide receipts of payment for those during the period of those 8 weeks. Other documentation that's required for forgiveness is FTE information. We've been working on exactly what the SBA is going to require there. We believe that your Q2 941 will be a good option there because that does list your number of employees. However, a payroll processor record should also be acceptable. So for example, if your payroll processor record just lists out how many employees you have, that should be more than fine. I think that's worth noting, if you're a sole proprietor, you actually will not need to provide any FTE information. So if you're just a single person, if you don't have any employees, if you're listed as 1 on your application, you should be good to go. You also need to provide documentation of non-payroll costs. And so what that means are whatever payments you have that are eligible expenses, and we'll get into that a little bit more in just a moment, you're going to need to provide a receipt of that showing when it was paid. So it could be the bill, it could be anything like that. Eligible expenses are as follows. They are interest-only mortgage payments, which is not limited to physical mortgages on the commercial real estate, for example. It can be a mortgage on any sort of business debt or business expense. Rent payments, so if you have a business rent that you're paying, or if you have utility payments. And so utilities, internet is included in that. I've gotten that asked regularly. So any sort of utilities that you have associated with the business are available. These essentially, you're going to provide your bills for it, and ideally documentation showing that you paid it. But so it should be a statement of what was owed and then what was paid. And so just keep good receipts as you're going along there. We already covered the documentation of employee benefits, so we'll move forward. I'm going to move a little bit quicker. I'm recognizing I think I'm a little bit behind where I'd hoped to be here. So funds that are not forgiven are going to be added to a 1% interest rate loan on an 18-month term with payments. For most people, it'll probably begin December 2020. So if you have a $10,000 loan balance and $8,000 is forgivable, you would have a $2,000 balance at 1% with payments beginning December 2020. You can also repay this as a single payment without penalty. One of the areas our closing staff have been advising people is, okay, if you don't want to have any debt here, if you take your funds that you have from PPP and you only use those for eligible expenses, you'll probably be left with a balance later. So many local SBDCs, for example, have been advising people, maybe you even open a separate account and keep your PPP funding in there. Specifically, you only transfer money out when it's for those eligible expenses. If you did that, if you had $10,000, you spend $8,000 on eligible expenses, you'd be left with $2,000 at the end. What you could choose to do is just pay that back. At that point, you leave the agreement with no debt. You don't have anything to worry about going forward there. That's a nice option because essentially you don't end up owing anything, which a lot of people I know that's enticing, especially as there's a little bit more uncertainty than is normal. Areas that can cause an application to not be eligible for forgiveness. So if you're an ineligible entity, so what that means is if you never should have been approved in the first place, if you provide falsified information, like let's say you have more than 500 employees, or you are involved in gambling or anything like that, you'd be an ineligible entity. And if the SBA caught that, your forgiveness request could be declined. We've done our best. I think that I'd be very surprised if we had any ineligible entities that we'd approved. If you don't have documentation, so for example, some of our applications for PPP were just handwritten notes saying, oh, I pay my employees $1,000 each per month. That doesn't work. We didn't approve those applications because that's not going to be a forgivable application. So you will need to provide documentation of all the payroll expenses, of all your other eligible expenses. Falsified information, meaning if the SBA determines that, for example, you've forged your Schedule C, forged your 941s, anything like that that we didn't catch in our initial process, that could lead to your application for forgiveness being declined. Ineligible use of funds. So for example, if you have a $20,000 loan and you provide me with an $18,000 speedboat receipt, that's not going to work. You need to spend it on acceptable uses. Another instance that's interesting is that if you were overfunded. One of our biggest complaints from folks was that we'd approve them for less than they requested. And we usually had conversations here and tried to work this out. You're only eligible for forgiveness on the amount you should have been approved for, which is why most organizations, most large banks, all the online lenders were taking whatever you'd asked for and just approving that. The problem will be that you're only going to be forgivable for the amounts that you were supposed to originally be funded for. You can't go past that. So we had a lot of people who are requesting $80,000, but they're actually only eligible for, let's say, $5,000. That's surprisingly common. And so that $80,000 borrower would turn around, apply for forgiveness, and only have up to $5,000 of that forgiven. The good thing is because we replicated everyone's calculations, if you received your PPP funding from DreamSpring, I'd be very shocked, once again, if that was an issue. I'm going to pull over an Excel document. So this is something that we actually created internally. All of this is subject to change, and it's just an idea of kind of how forgiveness is going to work on the whole. It's going to show you some of what the numbers are going to do and kind of track that. But this is not from the SBA. It's important that you realize that, because it's very possible a law gets signed that changes some of this. It's also, it's just an internal document. So if you provide this back to me, it might not be exactly what we need for forgiveness. So what we have here essentially, though, is a little Excel calculator that's supposed to kind of show how PPP forgiveness will work. We're going to be providing this out to anyone that's interested afterwards. And what we're doing here is going through and entering different information, and it's going to pop out some info at the end. So just to kind of fill this out, and just as more of a visual than anything else. So for my business, Rent a Puppy, I'm an LLC, you have to select an option because it's going to black out some information on the Excel tab here. We could add our tech team to create something fancier, but that's they've been busy enough with other things. So you'll enter your PPP loan amount. So let's say it's $20,000. And you're going to enter your date of dispersal. So let's say it's May 29th right now. So let's say I'm getting my money today. So 5/29/2020, it's going to automatically add 56 days to that for you to show you when your loan needs to be allocated by. So for me, for Rent a Puppy, I have until July 24th, 2020 to show expenses. It's also going to break out for me, okay, my minimum amount that needs to apply towards payroll is $15,000. My maximum amount for other qualifying expenses is $5,000. It's going to come down here. It's going to show you a list of qualifying expenses. So remember the maximum versus minimum difference here. If I go over to my expense input tab, I'm going to jot this down quickly, and I'm sorry about that. So let's say that 06/01/2020. So June 1st, I have payroll in the amount of $5,000. I have a utilities payment of $80. I have a business rent expense of $100. That's all probably incorrect numbers, but we get the points. What's going to start to show you is that it's going to add those over here. It's going to show you that you have current expenses eligible for forgiveness in the amount of $51.80 there. So you're going to need to spend a minimum of an additional $10,000 in payroll, and your loan balance, if you don't spend any additional funding, would be $14,820. You're working to get this number to zero. Total additional money needing to be allocated is $14,820. Money still available for qualifying expenses is going to be that $48.20 there. What this calculator is going to do as well is if I go back here, we've got $5,000 that's gone towards payroll. If I try and add $6,000 of utilities because maybe I left my water running or something, it's still going to max out at $10,000 being forgivable, even though 5 plus 6 should equal 11. It's recognizing I've gone back and I don't have any money available for qualifying expenses. So even if I add additional things here, I add another $1,000 for my rent, it still is not decreasing my loan balance. What it's going to show me is, okay, on my 6/15/2020 payroll, let's say I need to put another $5,000 there. Let's see, computer. There we go. That's going to start to bring this amount down. Your goal is to get this to zero. An important update for a lot of folks has been if you received an EIDL advance. So an EIDL advance is usually an amount from the EIDL loan program that's between $1,000 and $10,000. If you applied for this, it probably just showed up in your account randomly. EIDL money, any money you received as an advance, counts against your PPP loan forgiveness. So right now you can see I currently have $15,000 of eligible expenses, which means I have a $5,000 balance at the end. If I receive $2,000 through EIDL, what that'll do is pull down this number to $13,000. What you can still do is, let's say I go back to my expense input, I'm able to show another $12,000 of payroll. You can still actually eventually get your loan balance down to zero, which is very helpful. Moving along quickly to show you what this FTE comparison looks like. So if I had 10 employees on February 15, 2020, I reduced to 9, you'll see that your forgiveness is going to be reduced by $2,500. So for example, I have a total of 25,000 eligible expenses up there. So it's reducing that. So any amount that you go down, it's going to reduce your forgiveness. If you drop 20%, it's going to reduce it by $5,000, which can become substantial for sure. moving back up for the sake of time, for a sole proprietor or a single member LLC, I'm going to change this number to 10,000 to keep my math easier. It's asking you for your net income from a Schedule C, because that's how your forgiveness is being calculated here. I'm going to go and delete these expenses just to keep this all clean. So within this, it's going to show you down here what you're automatically qualified for your forgiveness. So I mentioned that you're not going to need to provide any additional information. This process is actually very similar for anyone that files an IRS, the 1065 return, the partnership return. What this is doing is it's showing you that as a sole proprietor, if you were qualified for $10,000, that means that you earned $48,000 last year. $7,384 is automatically going to be forgiven. So the nice thing there is that you don't have to provide payroll documentation of that. The way they're doing this math is this is 850 seconds. So there are 8 weeks of your coverage, 52 weeks in the year. So 8 divided by 52 times your line 31 of your Schedule C, which is your net income. And that'll break down what you're going to be automatically eligible for forgiveness. So for this particular sole proprietor, Rent-A-Puppy, if I did have these expenses there, let's say I could show 100 of utilities, what this is showing me is that currently I'd end up with a $1,500 loan balance that either I have the ability to pay back or to take that on as a debt if that's more helpful for me. So this calculator, it's a rough tool. It's not perfect. There are things that work well about it. There are some areas where it's harder, for example, to block things out. That being said, we're happy to provide this if it's something you can work through. For some people, what I've even advised is maybe you look ahead and say, okay, I know my 615 payroll will be 2,000, and you start entering that information to get an idea of what you actually need to spend to stay on top of things. So next question here, which is just what should you be doing now? For most of you, you were usually approved during the second round of PPP funding, which means you might have had your funding for up to 3 weeks now. You might have just gotten it yesterday. You might still be awaiting it as well. Your main task going forward is to keep good track of your expenses. Start to create a budget. Start to show when you expect to spend that money on payroll. Start to keep track of things like your FTE, looking at those things down the road. It's easy right now to become a little bit myopic and only looking at directly what's in front of us. But you want to start actively thinking about forgiveness and, okay, how and when will I be spending these funds? And starting to track that out a little bit. You're also going to want to watch for updates from the SBA and from DreamSpring. We'll be providing information as it comes out from them about changes, because we do recognize that we're expecting some changes to this program as a part of some of the new bills that are moving through. So, for example, if there's an increase from 8 weeks to 24 weeks, that's a substantial change. And we actually don't know what that legislation will look like fully. So it's possible that some of how you have to use your funds could change. It's possible that some of what's allowable can change. But the good thing, like I said before, is we're only expecting it to get broader. We don't think anything's going to be narrowing. We think that within this, it will only become more favorable for businesses. So start making a plan, start paying your employees, start doing these things, but also recognize that you do need to keep your ear to the ground, and there might be things that change that might be very beneficial for you to learn. So I'm going to encourage everyone to check your email. We do send out a lot of email correspondence regarding these things. It'll be good to stay up to speed. So Jill has been keeping track of some of the questions that have been coming through. If you have areas that were not addressed yet, you can definitely pop that in the questions box. We hope we can get to everything. We've got a couple hundred people on the call right now, so if they all fly in at once, it might be need to be something we answer at a later time, but we are committed to doing that. But Jill, do you want to start going through some of the questions that we have?
Sure, yeah, we have a lot of great questions. And first of all, we will be posting this recording as well as the calculator on our website at www.dreamspring.org. So please refer to the website if you want to see this again and get that calculator that Kevin was using. We can start in with some questions, and we probably won't be able to get to all of them, but we'll get to as many as we can. I had a few questions around what can be used as a Schedule C business, if we can use things like health insurance, Can that be used towards the PPP loan? Quarterly taxes that are paid, can that be used as an expense? Can sole proprietors write off retirement contributions and health insurance for themselves?
So that's an area that the SBA did announce in their new forgiveness, that health insurance and things like that for sole proprietors will not be included, which is discouraging for us because it seems very logical that it should be. That's an area where I would keep watching for that and see if that does change, because there has been quite a bit of pushback there, recognizing that's an area where it seems to be a little bit unequal right now. For anyone filing a Schedule C, it's based on what you were approved with. So if you gave us your 2019 Schedule C, and that's what we use for your loan calculation, then that's what you're able to use for forgiveness. One important note there is that any expenses you're going to claim for forgiveness need to be present on your Schedule C. So the way the SBA is looking at this is you cannot go out and incur new expenses where, let's say, for example, any business, not only a sole proprietor, doesn't have business rent currently, but they go out and sign a new lease tomorrow. That's not something you can use your funding for. It needs to be something that predated February 15th, 2020. And for a sole proprietor, what that means is they want it to be reflected on your tax return. So if you don't have any rent expenses claimed on your 2019 taxes, you can't turn around and claim those for forgiveness. So you'd look through, I think it's around boxes like 10 through 28 on your Schedule C, and you'd be able to get a good idea of what expenses you claimed. If any of those line up with eligible expenses, they would be eligible for forgiveness.
Great. And again, our website is www.dreamspring.org. We had several questions related to what will count as utilities. So people wanting clarification around, does internet count? Does phone count? Does alarm system services count? What exactly can be used for utilities?
That's a great question. And the SBA did publish a list of that. I don't have it in front of me right now. Jill, my understanding, I'm believing that I know internet and phones counts. I don't believe alarm systems are specified. However, I do think I would definitely keep good documentation of your payments there. Jill, any further thoughts on that? Or?
Yeah, I remember seeing the list, but I don't have it in front of me either. So I agree. I would keep good records and try to use whatever you can, but there is a specific list from the SBA around what is allowable.
And I would say refer to the forgiveness application, which I think we'll get a copy of that on our website soon. It is available now from the SBA. If you just put in PPP forgiveness application into Google, it should pull it up. Make sure it is an SBA website and not somewhere else that you get pulled for that. But that will give you a full list of what's eligible there.
Great. We had a question around, will money spent on employee bonuses and benefits, like insurance premiums, 401k matches, be forgiven?
Yes, it will be. So that's going to count under the category of payroll costs. And so bonuses, commissions, anything like that are all just associated with payroll costs. So any money that's really going to your staff is kind of the way you should think about this. So there are a few, I would say by default, yeah, healthcare, retirement, and any sort of benefit to employee in terms of wages is absolutely allowable for forgiveness.
Great. We had some additional questions around if employees quit during the 8-week period, or if employees don't want to come back, things like that. Kevin, do you want to talk a little bit in detail about what to do if you have employees that aren't going to come back or were let go with cause?
Mm-hmm. You need to provide written documentation. That's the main piece. And so any employee that leaves, and let's say it's something where they're not willing to provide written documentation, I'd provide a clear example that you tried to communicate with them of saying, hey, I recognize that you've resigned your role. If you would like, you are welcome to resume your position, anything like that. What you'll just need to give us is an email transcript or something that lets us kind of track through that. That area, it's interesting. The SBA had to add that on, recognizing that some employees were struggling with it. Just written documentation of any sort that seems viable would be what I provide. And within that, if they're fired for cause, just provide a written description of that along with their letter of termination.
Great. We had a question about full-time equivalent employees and if they can go over the one, like if you can get a 1.25 or a 1.5 for one employee if they're working more than 40 hours a week.
Yeah, unfortunately, it is capped at 1. So you would, unfortunately, so for example, if you were paying someone extra just for working overtime, that would start to count against you on the FTE comparison.
And then we had another question about if part-time employee payroll counts towards PPP forgiveness at all.
It does, yeah. So independent contractors do not count, but any part-time employee does. And so whatever your wages you're paying to anyone on payroll, even if they're working 2 or 3 hours a week, is eligible for forgiveness. Another thought on anyone that's lost employees, you can also rehire folks as well. Not that that's the easiest time to be doing it right now, but you do have the ability to bring people back if you feel like that, or hire a different employee and bring them on board. That's definitely something to help this not count against your forgiveness.
Now, does taking unemployment impact forgiveness?
It does. We're not sure exactly how the SBA will be tracking that, but if you are a sole proprietor, for example, and you've received PPP funding, from the government's perspective, that is your employment. So what we've seen advice for a lot of people is if you are a sole prop, you put your unemployment on hold if you receive PPP funds, recognizing that you can reopen it if you need to and start to gain access to those benefits again.
Great. We had a question around someone currently has a DreamSpring business loan obtained before the COVID pandemic. Does this payment apply to the business expenses forgiven?
Yeah, my understanding on that is that that should fall under the business mortgage category of things. It would need to be an interest-only payment. So we've had a lot of we've had a lot of folks, if you are a current DreamSpring client, we've been offering to let you move to an interest-only payment. The SBA does not want to be paying principal with those. So for any mortgage, that is any sort of business debt, is our understanding, would be eligible for that. So you need to provide your statements showing the payment there.
Great. And we definitely had some questions around the EIDL loan advance. Kevin, can you speak to that again?
Yeah, so what that's doing, we realized that we were confused initially about why they're calling this an advance, because they say it doesn't need to be repaid under any circumstance. They're viewing that as an advance on your forgiveness. So for example, if you received $1,000 from EIDL and a $10,000 PPP loan, if you come back and show $10,000 of forgivable expenses, what would happen is that $1,000 would count against your 10 of forgivable. You'd be reduced to $9,000 of forgivable expenses and be left with a $1,000 balance. Our current understanding from the SBA is that in this same instance, if you had a $10,000 loan and you came back and you had a $1,000 EIDL and you provided documentation of $11,000 of eligible expenses, that would mean that you would still be eligible for the entire loan to be forgiven. So what it means is that you do have to show more expenses. So same option as before, you can repay that if you want. So for example, if you do end up with a small balance, you could use your EIDL to repay PPP. That's acceptable, but it does count against forgiveness, which was interesting because they did not fully outline that for a lot of folks as they're applying for EIDL. That became a little bit clearer later on when more guidance around PPP was announced.
Great, and we definitely have more questions, but we are almost out of time. I guess one more question with sole proprietors, can you take the interest for your home mortgage loan or home, and can you use home utilities when you're a home-based business?
So that area is difficult. Jill, you might have to correct my memory here. I think the SBA has been a little bit stricter with sole props on this stuff. I would probably start by referring to your Schedule C. So for example, did you claim any utility payments from 2019 on your Schedule C? Or did your Schedule C reflect any sort of a business rent or mortgage expense? If it did, I think it's possible it'll be allowable. I'm not certain on that. I do know that if you don't have those reflected in your Schedule C as expenses, that it will not be allowable.
And unfortunately, we are going to have to wrap up. There is another webinar coming up here in just a couple minutes. We appreciate your time. We will try to address the rest of your questions. Again, our website is www.dreamspring.org. If you want to check out the recording and grab that loan calculator. And we will do what we can to try to address the rest of the questions that we received.
Thank you so much for joining, everyone. Have a great afternoon.